Thank you for staying with us. The program is Capital Market and we're live on Channels Television. Let's begin the second segment with the review of the equities markets this week. Now, the markets closed on a positive note as it was driven by better than expected company earnings released so far. The market also reacted to the increase in monetary policy rates by the Central Bank of Nigeria, increasing from 12 to 14%, which led to a 1.14% jump in the all-share index on Tuesday. The key broad index ended the week at 1.27% higher at 28,009.93, with a higher market capitalization of 9.62 trillion naira. Total volume traded rose by 38.31% to 1.87 billion shares worth 16.33 billion naira and traded in 21,584 deals. Market breadth remained negative, though with 18 gainers led by MRS appreciating by 21.45% against 26 losers, led by Skybank with a 17.65% decline. UBA, FBN Holdings and Access Bank collectively accounted for 51.12% of total volume of traded shares during the week. Now, a few weeks ago, the NASD OTC Securities Exchange reached an understanding with the major promoters of football in Nigeria. That's the League Management Company, otherwise known as LMC. The agreement centers on the merging of financial and sporting interests in a unique manner in the country. Now, we're privileged to have the Chief Executive of the NASD OTC Securities Exchange, Mr. Bola Ajamale, who joins us now to give us insights into this MoU. So good to have you around again, Mr. Ajamale.
Thank you for having us.
Okay, so you had this MoU signed with the LMC. We need you to talk to us about what you are trying to do, because these guys are football regulators and you are a self-regulatory exchange in the capital markets.
Well, the very first approach to it is to look at it as all football, all sports, all entertainment. They're basically businesses at the bottom of it all. So football is a business like any other, and football can be packaged into something that people can invest in and can raise their money from the capital market. And so what we are doing is, by trying to unlock the value that's already in these companies, in these football clubs, packaging them into businesses, we can actually create an investable instrument that people can invest in, the fans can invest in them, businessmen can invest in them, and we create a much bigger market for the country. Again, what it does is you will find that as opposed to running a football club like a basically as a football club that is just running, not a business. I'm trying to find a word that is not a business. You actually force some kind of discipline on them when you put them on a market, because they then have to report, they then have to value their assets properly, they then have to look at the value they're creating for their core stakeholders, who are not only the fans, but also the people who are putting cash in those businesses.
I know we're borrowing this initiative from the Western world. If we look at UK, if we look at the La Liga, we look at the German and Italian clients, we will see that quite a number of football clubs are actually listed in that climb. But are we now ripe enough to do the same thing in Nigeria, really?
Well, I think a lot depends on the discipline and the approach you take to it. Will we ever be mature enough? If we stay waiting for when we will be mature enough, then we won't get there. What we can see is that we do have a league. They've got 20 businesses in there, potential businesses in there. They have assets that have not yet been valued or tested for valuation, and they are generating some form of income. Now, they are capable of generating a much bigger revenue once they come into a market and once they have the discipline of a market. Now, the clubs that you have seen abroad that have gone into markets, some of them are 100 years old, some of them are older than 100 years old.
True.
And most of them approach the market when they reach a certain stage of maturity. Some of them started approaching the market when they were 40 years old and so on. We, however, have the advantage in this country of seeing the pitfalls, of seeing the success factors that have gone into the clubs that have stayed on the markets, and we have seen the pitfalls of those who have decided to leave the market. So in the early 90s, you had twice the number, at least, of companies that you have now listed on the markets. So some of them have actually opted to go back to being private, while some others have forged ahead and have actually listed on one market and then expanded their listing into other markets.
They say football is religion in Nigeria. Let's hope that can work out. But let's look at a couple of football clubs that are listed. We have the Borussia Dortmund. We can get that now on the screen, that chart that tells us what their market value is. Celtic FC is also listed. And I think Celtic is listed in London or thereabouts. Manchester United is also listed.
Yes.
Arsenal is also listed. But we've seen a couple of other listed companies in the past, and it didn't augur well with them. Tottenham is an example.
Yes.
Yeah, So how sure are we that these will work, this time in Nigeria? Because again, the Nigerian Stock Exchange some time ago has tried to, bring football clubs into the market, get them listed, but that didn't work. How much of seriousness are you attaching to this time?
Okay, now a lot depends on the resolution of the company to be on a market and stay on the market. A lot of it depends on the structure of the ownership. If the ownership is interested in staying on the market, then what they do need to do, first of all, is ensure that they have got their corporate governance right, make sure they have got their financial reporting right, make sure they've got their right standing with all the regulators. That's the first step. The second step is then to take account of what their assets are. Now, the primary asset of a football club, essentially, the players. And so the agreements, documenting the agreements properly. Some of them own stadiums, some of them own the franchises for their merchandise and so on. So taking account of all of those and running them effectively, running them properly, would be some of the major determinants of whether you stay on the market or not. Now, for a Tottenham, for example, I think they came into the market and they realized that the way the market was valuing them, they probably were not too happy about, and so eventually they opted to go back into being a private company. We have seen some companies that have been bought up by businessmen, and they have decided to take the company back to being private. And then we have seen some other companies, and again, your being quoted is not the immediate recipe for you winning the cup, but at least what it does is it puts some discipline on the way the football club is managed, and it generates a revenue for all the stakeholders, which is what we are very interested in seeing. As you know, NASD, one of the first watchwords we have is to unlock value that's been tied up in various assets.
All right, we'll continue the discussion shortly, but let's quickly take a look at the African exchanges. This week, they recorded positive performance week to date, and of course, news from the corporate world and the regulatory sides continue to drive interest. In Egypt, the central bank cracked down on illegal FX traders as the Apex Bank goes after more speculators to sanitize the market. Nigeria, on the other hand, jacked up MPR by 200 basis points to 14%, and that also drove the markets to the positive side. We'll go on a break now, and when we return, we'll continue the discussion with Mr. Bola Ajamale. We'll be looking at the legal implications as well as the funding structure that are going to be proposed for that market.